Hello and good afternoon. Thank you for joining us today and welcome to the first of 3 listening sessions hosted by CalHFA to discuss Homeowners Assistance Fund California Mortgage Relief Program. I'm just going to ask our operator if they can mute the other phone lines. I'm getting a little feedback. My name is Nicole Evans and I will be facilitating today's session. Before we get started, I just wanted to go over a few important points for all of you. First of all, we want to let everybody know that today's session is going to be recorded. That recording, along with a transcript of today's meeting, will be available on the CalHFA website in a few days, probably early next week, for anybody who wants to come and take a look at that. Also, if you need technical assistance with this webinar during the meeting, during the session, please go to the link at the bottom of this slide and you can get some assistance. Finally, we have handouts and documents related to this listening session, and you can access those by clicking on the red arrow at the top right section of your screen. More information about this program and additional ways to submit public comment can be found on the CalHFA website at the link listed on today's slide. That is an important link. Just please take note of that. We'll be referring to it quite a bit today. Finally, everyone is going to be muted during the presentation portion, but we are really interested in giving the bulk of the meeting over to you. So we want to hear from you. We want your feedback and input. So during that portion, we'll ask you to raise your hand, and then when it's your turn to speak, your line will be unmuted. So until then, though, everybody is on mute. So let's not delay any longer. Let's get this meeting kicked off, and then we're going to start by having the CalHFA team, which is the agency that's going to be administering California's program, explain a little bit about the Homeowner Assistance Fund, and then we're going to get your feedback. We want to receive comments on the administration of California's portion of the Homeowners Assistance Fund, which was created through the Federal American Rescue Plan Act. Please note, this is really important, and you'll hear it later in the presentation, but California's program is still in development, and this forum is an important part of that development process. We want to hear from the public, we want to hear from stakeholders, and to get your feedback in that plan development. We want your recommendations and preferences for current homeowners' needs and assistance. And just an important reminder before I hand it off here is that HAF funds are not currently available for distribution. The program is still in development by the federal government as well as California. So if there are homeowners at this meeting who want to request assistance or have a question about how to get mortgage assistance, we really encourage you to contact a mortgage servicer or call a HUD certified housing counselor at the number at the bottom of this slide, 1-800-569-4287. to see if you can get some immediate help or if there are other resources available to you. So with that, I would like to introduce members of the CalHFA leadership team who are here with us today. You may not see them, but they are here. You will see one of them though. You will see Tim Sue, who is the Director of Single Family Programs and the HAF Program Manager for CalHFA. We have Francesca Marty, the Director of Legislation and Policy, Ted Ballmer, CalHFA attorney, and Kathy Phillips, who is the Director of Marketing and Communications. And they're all here with me today. At this point, I want to kick it off to Tim, and he will share a little bit more information.
Hi, good afternoon, everyone. Hope everyone is ready for the heat that's coming in the next couple of days. So I'm going to first provide a brief overview of the program. As Nicole mentioned, that the program is part of funding provided by ARPA, and ARPA allocated about nearly $10 billion for the Homeowner Assistance Fund to all the states who wish to participate. And using a formula that's based on unemployment and distressed mortgages, about a little bit more than $1 billion is allocated to California. And we have applied to use those funds to start the program in California. And the main purpose of the program is to help homeowners with mortgage delinquencies and to prevent default, displacement, and foreclosures and other hardship that homeowners could be experiencing during this pandemic. And as Nicole mentioned earlier, the Treasury has announced in their guidance various deadlines for submitting the plan. At this point, our plan is due at the end of this month. And it will take them some time to approve our plan. And if the last go around, the hardest hit is of any indication of what may come, is that they will give us comments and we'll have an opportunity to answer their comments. And there could be an iterative process after we submit our plans on June 30th. Next slide, please. And I'm going to go over here some of the key requirements that was provided in Treasury's guidance and also some of the permitted uses, again, provided by their guidance. One of the key requirements they have is the eligibility, that the hardship by the homeowner must be experienced after January 21st, 2020, and that the mortgage loan that a homeowner has must also not exceed the loan limit at the time of the origination. So ensure no jumbo loans. And in terms of targeting, Treasury definitely wants to focus on low income and also socially disadvantaged individuals and communities. So at least 60% of the funds must be targeted at 100% of the area median income, or AMI. And there's a general prioritization of, again, socially disadvantaged individuals and communities. And that's definitely something that we're focused on as well. And here's a sample of some of the permitted uses of the program. As we have mentioned, mortgage assistance is definitely something that's top of mind. And homeowner insurance, HOA fees, and also property tax. And in terms of utilities, electric, gas, water, and internet are also part of the permitted uses. Next slide, please. And here we have some high-level implementation goals. These are things that we definitely are focused on. Once again, there is a definitely focus on prioritizing low-income, socially disadvantaged, and underserved individuals and communities. And our program, to the best of our ability, and this is something we're also very focused on in terms of operations, is to set up a system that's easy and streamlined so that we can get this money out as quickly as possible. And we also want to prevent any duplications with other state and federal programs out there. And we're taking a very holistic approach. As we have been talking about, mortgage delinquency is definitely top of mind. We want this program to eliminate delinquent mortgage loans, including forbearance amounts. And we also want to focus on ways that we can help homeowners stay in their homes with an affordable payment. And there is also a focus on connecting vulnerable homeowners to counseling options. This is something that we have talked focused on a lot as we are thinking about this program. And with the counselors' help to facilitate long-term recovery solutions for unemployed and underemployed or severely housing burdened homeowners who have suffered during this pandemic. So those are some of our high-level implementation goals, and I'm going to turn it back to Nicole to facilitate the listening session. Thank you.
Thank you, Tim. Thanks very much. Like I said, we wanted to dedicate the bulk of this meeting. We're going to be here today until 4:30 to hear all of your comments. So everyone will have an opportunity to speak, but and we want to hear from you, and that's important. Again, I want to remind you, though, that this plan still is in development, and so we may not have all the answers to your questions today, but what we really want to hear are your recommendations and your preferences. So if you would like to make a comment, again, we ask you to click on the raise hand button near the top of your screen, and we will make sure that we can get to you and have an opportunity for your comment. if you listen for your name, and then when you hear it, you can unmute yourself and provide your comment. We also want to be sure that everybody has an opportunity to speak. And so we're asking that folks try to keep their comments limited to about 3 minutes or less. And then if there is time at the end of our meeting, and we did a session earlier today and we did have that time, we can circle back around and have an opportunity for people to talk a little bit more. For those of you who may not want to get on camera and provide a comment today, or to verbally provide a comment today, you can also submit a written comment. You can go to the CalHFA website noted here at the bottom of your screen and provide, there was information and an email address for providing a written comment. There's also a survey that you can complete. You can do both, you can do one, you can do neither, it's up to you. But we do want to hear from as many people as possible. So I think we can go ahead and get started with, oh, and then I also just want to remind everybody, if, again, the HAF funds are not available yet. So if you are a homeowner in need of mortgage assistance right now, please contact your loan servicer or a housing counselor at 1-800-569-4287 for help now. We ask you to say your name and organization when you do hear your name called. It's helpful, but it's not required. And so with that, I think we can go ahead and get started. So we will ask our moderator on the line here if there are any comments.
Yes, Lisa Sipkin, your mic is unmuted. Please go ahead with your comment.
Hi, Lisa. Lisa, have you unmuted yourself?
Okay. Am I unmuted now? Yes.
We hear you.
When will we stop saying those words? Thank you very much for this opportunity. I'm Lisa Sitkin, Senior Staff Attorney at National Housing Law Project. And I have been working both at the national level and already at the state level, engaging with CalHFA on this program. I worked for many years with homeowners during the foreclosure crisis on accessing Keep Your Home California assistance and interacted a lot with that program. And based on that experience and also what we're seeing during this crisis that has some unique characteristics, I wanted to make just a couple main points here. I'm also submitting lots and lots of written information, so I won't try to cover everything. The first is that I think it's really critical that the program address and prioritize homeowners who are not getting assistance in other ways and don't have other options. And the four main categories I would put in that are borrowers with privately held loans who are not protected by the various federal agency post-forbearance options, deferrals, modifications. And many of whom are facing lump sum repayment demands that they cannot possibly meet. Second would be reverse mortgages, and I think this is a particularly important group because even though they've gotten deferrals during the pandemic, there really are no viable good options for them to make up the defaulted property charges that may have put them in default. And they really need to have those monies paid back to their mortgage servicers. And I also think reverse mortgages will also allow you to honor some of the priorities, particularly the under 100% AMI, because most of these are low-income seniors, extremely vulnerable, the people who have these HECM loans. Another group would be those who own manufactured homes, mobile homes, including, importantly, those that are not affixed. Many of the most vulnerable homeowners pay rent in a community and have a mobile home that really isn't movable, but is not permanently affixed in the way that would require, that sometimes that line is drawn. So I think it's really important to include them. And then property tax and HOA fees are also, types of obligations that are not going to get other assistance. The last thing I'll say, I know I'm coming on my 3 minutes, is that I think it's really critical for the agency to reach out and partner with community groups at all stages of this process, including planning and development, when you launch, and in terms of outreach in particular. And I think that you should consider having some sort of advisory group made up of people on the ground who are working directly with homeowners, especially in really impacted communities, and be able to give real-time feedback about the program so that there can be course corrections as needed as well. Thank you very much.
All right, thank you, Lisa, very much. Appreciate that input, very helpful. Do we have another comment for us? Do you have another comment?
Rosie Papazian, your mic is unmuted. Please go ahead with your comment.
Thank you. Hi, thank you so much. Rosie Papazian, New Economics Women. We're a housing counseling agency. My comment will be short. I would like to suggest that perhaps a little bit more of an allocation should be given to folks that are perhaps over the AMI threshold that was previously stated. In my experience, talking to some folks who have come directly to our agency for counseling prior to COVID, they were perhaps making slightly over the AMI threshold, but because of the impact that COVID had on their income, they lost half of their income, and therefore, by the way it's structured right now, those folks wouldn't be eligible for the funds. However, they were impacted, and perhaps now they haven't recovered 100% of their income. My second comment would be that these funds be very particular about who they're dispersed to, and making sure that the homeowner had a verifiable hardship related to COVID-19. Another issue that we've encountered a lot with the folks that reached out to us are folks who were misinformed about not paying their mortgages, but do not have a verifiable hardship related to COVID-19 in order to be able to justify why they stopped paying their mortgages. And those are my comments. Thank you.
All right, Rosie, thank you very much. Helpful input. Do we have another comment at this time?
Yes, we do. Allison Snow, your mic is unmuted. Please go ahead with your comment.
Hi, my name is Allison Snow. I'm a senior attorney at the Legal Aid Society of San Diego. Like Lisa Sipkin, I worked through the last housing crisis that we had, and we learned a lot of lessons in that prior mortgage crisis. One of which is that actual monetary assistance to homeowners is probably the greatest factor in helping homeowners get out of the delinquency and be able to save their homes. So to the extent that we're allocating money, a good chunk of change should be dedicated towards actual monetary assistance to helping these homeowners retain their homes. Next is the need for legal services assistance, money allocated to allowing different community groups, legal services, actual attorneys who can help enforce compliance in the servicing arena. There's a lot of options available to homeowners for how they can keep their homes, but unfortunately, servicers have no incentive for compliance if there is no enforcement. And so legal services were a significant factor in making sure that servicers complied with the requirements that already exist, that we already hard fought for in the Dodd-Frank Act. And without an actual attorney to help them, it is very difficult to get justice on those issues. So they may meet all the requirements, but without money to help people save their homes, to pay for attorneys to do so, it is very difficult to keep and retain your home. Well, I also echo Lisa Sitkin's call for a roundtable that has stakeholders that regularly meet to discuss the issues that they're seeing so that we can act in real time to make adjustments. Having a California monitor in the last round was a very good element and helped enable communications between government, industry, and people helping on the ground and homeowners on the ground. So I highly recommend a stakeholder and something equivalent to a California monitor. And finally, the issue that was highlighted was or housing counseling services. There is a lot of money already directed toward housing counseling services. A lot of the national mortgage settlement funds have been dedicated to housing counseling and do not provide for legal services assistance. That would be duplicative and contrary to the priorities established and that were listed in the PowerPoint that you just presented. I think there's ample money already out there for housing counseling. I think where the money is best directed is toward actual monetary assistance for the homeowners and to legal services to help enforce these homeowner rights. Thank you.
Thank you, Allison. Thank you very much. All right, let's see who else is interested in providing a comment.
At this time, we do not have any other public comments.
Oh. I will pause here for a moment and see if somebody else wants to raise their hand. I also wanted to mention we have a prompt here on the screen, and here is something in particular we would love to get comment on, but not to the exclusion of other comments. But we are interested in hearing from the group on to get your thoughts on how best we can identify the barriers to participation, some of the bigger barriers to participation. Interested in knowing your thoughts on what types of assistance you feel is most necessary, and to get input on effective communication and outreach methods to ensure the most vulnerable people are made aware of this new resource. But those are some things that we'd love to hear about, but if you have other things you want to talk about as well, we encourage you to do so. We have plenty of time here left today, so I encourage you to provide the feedback you would like.
Nicole, we do have another comment. Emma Elizabeth Gonzalez, your mic is unmuted. Please go ahead.
Hi, my name is Elizabeth Gonzalez. I'm the directing attorney for the Consumer Law Unit at the Public Law Center here in Orange County. So couple of things. There are a number of barriers to participation. So I don't know that I can give you the greatest ones, but I will tell you that at least language, for sure, in Orange County, I think the major languages here are Spanish, Vietnamese, and possibly Korean. There are others. So not having things not just translated, but translated well. So not using something like a Google Translate, because a lot of those words don't work for our folks. And then also to be aware of what the translation says, because if it's too formal, too legally, folks aren't going to understand. Related to that, I think, is also technology. We have seen firsthand in the last year and 2 months that many of our low-income clients, and that's who we serve, do not have technology. So they don't have the ability to download, fill out, print, sign, scan, send back. We have found ourselves having to mail documents to have signatures. And so I think having alternative ways to apply, especially by mailing documents to individuals. I would also say a barrier would be what we see a lot in my consumer practice is a feeling of shame. A lot of individuals who are lower income and have done their best, gotten to the point where they've been able to own a home, they feel a tremendous sense of shame and embarrassment at not being able to pay and not having the income that they used to have. And so I think any way to acknowledge that, and then it's not just you, it's everyone that's feeling this, would be really helpful to make people feel like, oh, I'm not taking advantage of a program, I'm not taking money that doesn't belong to me. Because there's a lot of pride and a lot of, I don't want to take advantage of something that I don't belong, I shouldn't get. And I think that dovetails into the communication outreach methods. We are funded by a number of grants that require numbers of people to come to us, and we find that the best way to reach out to people is to partner with faith-based organizations, other legal aid organizations, and community organizations. And that's where people are. So for example, here in Santa Ana, we work a lot with the Delhi Center, with Legal Aid of Southern California, which is now Classical, sorry. And then even like UCI, I think Stacy's on this call, like they get clients, they refer to us. And so it's just it's not a large community, and we can all talk to each other and share things. And I think I agree with Allison that some of the most important type of assistance would be to allow fund some legal aid services to help, because we have a number of clients that are presenting with non-homeowner issues. As we're working with them, we discover there are homeowner issues. They are behind on their mortgage, they don't know how to pay. And so we then have to triage that. So that would be really helpful to be able to use some of the funding to fund either clinics or at least a staff member to be able to triage those cases. I have so much more, but I will leave it at that for now. Thank you so much.
Well, thank you, Elizabeth. And, if we run out of time or can't get all of your comments today, we really encourage you to submit written comments as well, or in addition, so we can get the entirety of what you want to share with us and as we develop this program. So you can do that by going to the link at the bottom of this slide, and it'll provide you with an email address for submission of a comment, or you can take the survey that's available on the CalHFA website. Do we have another comment right now?
Yes, we do. Nisha Kashif, your mic is unmuted. Please go ahead with your comment.
Hi, good afternoon. Can you hear me?
Yes, I can.
Great. Hi, my name is Nisha Kashif. I'm a staff attorney at Public Counsel. We're a legal services organization in Los Angeles. I echo all of the comments made by Lisa Sipkin, Alison Snow, and Elizabeth Gonzalez. I also just wanted to note a couple things as far as populations that I believe should be included within the eligibility criteria for this program. First, I think it's important that even if homeowners have filed for bankruptcy, that they are eligible to participate in the program. Many homeowners file for bankruptcy in an effort to stop a foreclosure or save their homes. And so simply having filed for bankruptcy in and of itself should not be disqualifying for participating in the program. I also wanted to note that here in Los Angeles County and throughout the state, we have many homeowners who are not only in financial distress because of COVID-19 and income loss due to the pandemic, but also because of liens placed on their properties through the Property Assessed Clean Energy Program, or PACE. And so again, I would urge the state to make sure that simply because a homeowner has a PACE lien on their property, which may show up in some instances as a county tax lien, that homeowners with those types of liens are not categorically excluded from the program. In terms of assistance for homeowners, absolutely direct assistance to homeowners should be the priority. I also agree that legal services are going to play a critical role in helping homeowners recover from this crisis. And so funding for legal services organizations should also be a priority. In terms of assistance for the homeowners, as one of the challenges that our clients face, especially our senior clients or our clients with disabilities, is they have both technological barriers and other barriers that make it difficult for them to complete large volumes of paperwork timely, and submit paperwork that may be needed. And so I'd encourage the state to ensure that first, the paperwork requirements, the document requirements for this program are as minimal as they can possibly be. We really would not want to see unnecessary barriers put up for seniors, people with disabilities, and people with limited English proficiency. I'd also encourage that in addition to whatever assistance is available online, that homeowners should have the ability to call someone who's overseeing or administering the program and get assistance with either documentation or getting questions answered that way. Having a real live human being to talk to is really invaluable for our clients. And so as much as that communication method is possible, I'd certainly encourage it. And then the last thing I'll say in terms of outreach to clients is, in addition to the great ideas that have already been expressed, we find that our clients often hear about things through the ethnic press, so press in other languages, Spanish, Vietnamese, etc., and also on the radio. And that's a really common way that our clients get information. And so encourage that to be taken into consideration as well. Thank you.
Great, thank you so much, Nisha. Appreciate your input, very helpful. Do we have input from or comment from anyone else right now?
Yes. Joanna Torres, your mic is unmuted. Please go ahead with your comment.
Hello, this is Joanna Torres with California Rural Legal Assistance. And I agreed with all of the prior comments made, especially the one about limited English proficiency applicants. When I assisted homeowners through Keep Your Home California, in the Spanish line, they used formal language, which the clients had a difficulty understanding what they were asking or what documents were requested. So even though it was in Spanish, it was still difficult for them to understand. So I wanted to just reemphasize that. And I also wanted to offer up maybe the idea of doing outreach through the tax rolls records. Maybe that would be another way to reach the population most in need. And that was the only comment I had. Thank you.
Thank you very much. We are interested in hearing data sources. We have some good data sources that we're using for, to help develop and identify the population, but I'm open to other ideas of data sources. So thank you for that, Joanna, and for your other comments as well. Thank you. Do we have any other comments at this time?
Yes. Francine Castanon, your mic is unmuted. Please go ahead with your comment.
Hi, I can't agree more with those ladies, especially the one in Orange County. My name is Francine Castanon. I'm a HUD certified counselor here in Ventura County. So for those of you who have no idea, we are an hour north, in theory, of Los Angeles. So we predominantly cover Ventura County, Santa Barbara County, and San Luis Obispo County, and Kern County, which is Bakersfield area. And the biggest hurdle I am finding with clients who are coming in for forbearance help or to come out of forbearance is, one, there is no clear pathway from the servicer on exiting forbearance, or there has been some significant life change. And the biggest demographic age-wise I'm getting is 55 and older. So they may have pre-COVID or during COVID become some form of disability, accident, life happening, or as a result, I have one client as a result of COVID has not exactly been able to return to work, or because of their age, their work disappeared for a variety of reasons, and they seem to be in that gray area the most. I know Freddie came out with a program to help people with lower income requalify or refi their home. Unfortunately, they have to come out of forbearance to be able to do that refi with Freddie Mac. And they can't come out of forbearance because they are not financially sustainable to do that. Some people have had to take early retirements because, you know, their company disappeared, what have you. So again, they're stuck between a rock and a hard place to get them those programs that are available. So it's figuring out how we can assist them to be able to keep their home and make it affordable. But that has been one of the biggest barriers, and also helping people pathway out of forbearance. They're just telling them, okay, you're out of forbearance, and there's no real explanation on what's happening with that fund, especially if it's a servicer versus a bank. There is a lot of confusion because I talked with so-and-so today, and when I call back tomorrow, I get a new person and new answer. So those old Keep Your Home California Day things are starting to rear their head again. So those are things we kind of have to have a pulse on. Thank you.
Okay, that's really helpful. Thank you, Francine, very much. Do we have another person on the line who would like to provide a comment?
Yes, Stacy Tutt, your mic is unmuted. Please go ahead with your comment.
Thank you for the opportunity to speak here today. My name is Stacy Tutt, and I direct the Consumer Law Clinic at UC Irvine. And the reason I'm calling to speak out in regards to this is just to identify a particular population that I think is in need of assistance. And that in particular is older adults with a reverse mortgage who are encumbered by high property charges and so are facing foreclosure due to their inability to pay their property charges during the COVID crisis. As we know, those property charges weren't suspended COVID. And so it's been particularly difficult on this population that have already tapped into the equity of their homes in order to be able to stay in them, and the property charges really being the most important expense that they're dealing with in order to remain in their homes. And so we would advocate for their inclusion in the program. In addition to that, our clinic works a great deal with homeowners that have a property assessed clean energy assessment lien on their property, which results in very high property taxes for those individuals. And then most of them have, if they have a purchase money mortgage, have their property taxes then escrowed. And so our clients are struggling in order to maintain those payments, in particular during the COVID crisis. And so we would want and hope that the relief would allow them to address any escrow shortages that they have, and allow them to then modify or hopefully get more affordable payments through the assistance with their property charges. And then as for ideas for outreach and the ways to connect with individuals, I would strongly encourage the use of the tax rolls to send notices to homeowners and ensure that they know, in particular in working with older populations and older adults that are not on the internet as much or using technology. I think there's an importance in sending those materials or connecting directly with their communities, whether that's through faith-based organizations or organizations that work with seniors in particular. And we think that type of outreach would be really important. Many of our homeowners are very leery. They're often targeted by rescue scams and fraud. And so having some consistent information and referral sources for them would be particularly important. And last but not least, I think that it's important that it's a very streamlined application process. Right now, because of COVID and the restrictions that are in place, I think it's very difficult for homeowners to have to go out and get lots of documentation in order to qualify for the programs. And I think that that could regrettably prevent many from qualifying that otherwise really need the assistance. So thank you so much for the opportunity to speak here today.
Thank you very much, Stacy. Really helpful information. Who next? Who do we have? Anybody else who'd like to provide a comment?
Yes, we do. Lisa Sipkin, if you unmute your mic, you can go ahead with your comment.
I'm back for a second time, if that's okay.
Fine, totally fine. We have to make sure that everybody has an opportunity. So
absolutely, I'll keep it short. I'm not going to try to be exhaustive here, but the couple things I wanted to touch on. One is that one of the real barriers during the Keep Your Home California assistance days was actually the servicers. And I think that in developing the program and in entering into whatever agreements are going to be in place with servicers, for their participation, I think that the agency needs to be really mindful of making sure that servicers really have enforceable obligations about how they interact with the program and do not sort of have veto power, certainly over things like receiving reinstatement funds. It was amazing to me that I would have a client who made it through the whole Keep Your Home application process, got offered and approved for those funds, and then we would spend months struggling to get the servicer to just accept the funds and apply them. That should be incredibly straightforward, and that particular kind of assistance out of any should be easy. There should be no veto power, and I just want to make sure that the agency goes in with its eyes wide open about how difficult interacting with servicers can be. They have all of their own issues and dysfunctions and obligations and pressures, and I cannot sort of underestimate the difficulties that they can cause in preventing people to get this kind of help. For that reason, I also think that prioritizing, or at least if you're doing phased rollouts, really focusing on reinstatement for those who can, get back to their payments is really important. I think it would be great if the program can help with things like principal reduction or leveraging the funds to help with modifications. But again, those are much more complicated transactions and require much more on the servicer side, and there have to be controls and understandings in place at the outset to make sure that things like that can actually be seen through to the end, so that there's real resolution and that people don't get stuck in limbo. The only other thing I think I wanted to add, I think people have said some really great things along the way, so I won't try to repeat those, but I do think that having, something along the lines, I know I said before about sort of an advisory board, I think that would be important, but I also think thinking in terms of trusted advisors or community ambassadors for the program who have a formal relationship and actually get resources that aren't just, isn't just like, let's ask this community group to do it, but really are integral to making the program work and getting to those communities that in many cases were left out of Keep Your Home California. So that kind of model community ambassador just occurred to me, and I think it would be something to consider. I will stop there. Thank you.
Okay, thank you, Lisa. Really helpful and thorough feedback today and during this session from everybody. So it's really, really helpful. And like I said, the plan is in development. So what you say here today matters a lot as we work on that, as CalHFA works on that. Do we have another comment at this time?
At this time, we do not have any other comments.
Right, great. Like I said, it is really helpful. What you say matters right now. Tim reviewed this. The plan is due to U.S. Treasury at the end of this month, and then they'll need some time to review and provide approvals or feedback to the state. And so everybody is working as quickly as possible to get this launched to meet the need, because it sounds like there is a lot of need out there. So helpful to, and it's an iterative process. It's not going to be locked in stone. We expect that there will be changes and adjustments along the way. So plenty of opportunity for public participation.
Yes. You have another comment.
Great.
Mary Kate Gleason, your mic is unmuted. Please go ahead.
Hi, can you hear me?
I can, Mary Kate. Thank you.
This is Mary Kate Gleason. Thank you so much for the opportunity. I'm actually learning a lot from listening to these attorneys. I'm an actual homeowner. So I was wondering a couple of things. One is there any estimate? I know there's going to be an iterative process back and forth, and the original comments are going to be submitted in June, but is there an estimate about how long before you guys might be able to actually roll this out? August, September? And I know it's not definitive, but do you have a ballpark?
I appreciate that. I mean, we did a session earlier this morning, and a real key takeaway really was hearing from, actually there were a good number of homeowners on that one. And we really did hear the urgency that people are feeling, especially with this September date looming large. And I think that's something that will be helpful to for us to consider potentially noting. This kind of feedback is really important to note when we submit the plan to Treasury, because not all the timelines are within the control of CalHFA.
Right.
Yeah.
Right. Okay.
Yeah.
The other was there's on your presentation, it said that there, for eligibility, I think of like 60% of AMI. Is there a number that's associated with that in terms of income? Like
what the general income for 100% AMI might be?
Yes.
Yeah. I will turn it over to Francesc to see if he has that information.
So yes, thank you for your question. Those are area median income calculations, I believe. I mean, as Nicole said, we're still developing the program and fine tuning exactly how that's going to be applied and implemented.
Okay.
But in terms of getting a general sense of that, I'm not saying that the program will use those precisely, but like our sister agency HCD does have area median income tables on their website that are publicly available that you can look at.
Okay, because I just for a ballpark, I was fully completely on unemployment, so I'm hoping that the numbers don't fall below an unemployment income, and that would just be some.
Well, those are maximums. They're not minimums. I just want to make sure.
Okay.
Yeah. Those are maximum income levels. They're not minimum income levels. So if somebody is unemployed and they don't have an income at that particular time, they fall under that income.
Okay, perfect. That's what I was wondering, because I would hope that it would be, you know, if your income just was unemployment, that you would be eligible based on that. Yeah. Okay. Thank you. So yeah, and I think that was it. And then the only other thought I had was, and this has been brought up before, what is the is there some consideration of using the Keep Your Home California process, since it's already been rolled out, and just improving upon it? I mean, is that one of the possible? There's always.
I think we're looking for recommendations along those lines from individuals participating in the public comment process, either in the meetings or in writing. And so if people felt that was a good program that just needs maybe some tweaks, then provide that feedback to us, and that will be helpful to know.
Okay. I didn't know anything about it because I didn't participate, but it just seems like everything's already there. The website, the phone number, the information's already out there. So it's like 80% already there. But anyway, I know you guys are thinking about those things. So that's all I had.
Okay, thank you, Mary Kate, very much. Appreciate
Thank you.
You're from homeowners, so you're the intended party here. So thank you.
Thank you.
All right, do we have any other comments at this time?
No further comments at this time.
All right. Well, we are committed to staying here until 4:30 today. So we want to be here in case people come to the session a little later, and that's fine. And make sure that everybody has an opportunity to give comment. Like I said, we had a session earlier this morning. We have very good participation, and there'll be another one on Thursday, the 17th in the morning. And that will be the completion of the public listening sessions, but it's not the last opportunity. People can provide comment. You can go to the CalHFA website and use the address here at the bottom of the screen, and there's options to complete a survey or just to submit your own written comment. And you can do so. We are on a deadline to submit this plan for June 30th. So for comments to be weighed in on related to that plan, we do need them fairly soon. So please don't delay and try to get those into us by the end of the week if possible. Do we have any more comments? Well, like I said,
no, not at this time.
Okay, thank you.
Wait, I spoke too soon.
Okay.
Rosie Papazion, your mic is open and we're ready for your comment.
Thank you. I'm so sorry. Just one final thought as folks were bringing up Keep Your Home California. We previously worked with Keep Your Home California, and one of the barriers to be able to access the program was that the program required that whoever was on title had to be present to sign docs. This was a large barrier for individuals who had maybe spouses who they did not have an amicable separation with and were not legally divorced. We had a situation with domestic violence where in order for Keep Your Home California to even consider the case, they had to see a police report. So my suggestion here would be for however these funds are going to be dispersed, if you have a situation like that, perhaps to be a little bit more flexible in circumstances like this. It was a very cumbersome process. Thank you, that's all.
Okay, thank you, Rosie. Any
Okay,
other
we
comments?
have another comment from Alison Snow. Your mic is unmuted. Please go ahead.
Thank you. This is Allison Snow again. During the course of the pandemic, our experience in working with consumers it's proven very difficult to use platforms that are not geared to a mobile application. So to the extent that any of this is available online, that you can apply it online, that a mobile application is available that's easily accessed on people's telephones. I have a lot of homeowners who can't afford internet, separate internet service, and the only internet that they have is available through their cell phones. And so being able to upload documents from a cell phone, be able to take pictures of documents with cell phone and upload those to the system is really important for them to be able to have access to that. And so that's just one of the areas. And then I also wanted to echo, when trying to reach out to communities of color and to senior citizens, a lot of the senior citizens' Social Security would put them outside of the 100% AMI. So I think we really need to take a careful look. Most homeowners still have hardship, even up to 400% of the AMI. You see that in similar circumstances with charity care, for example, in the medical debt area. And so hospitals provide charity care up to 350, 400% of the federal poverty line. Homeowners generally have a bit more income. That's how they afforded their home in the first place. But we want to make sure the very people that we want to target aren't going to be excluded based on income. And so senior citizens on a Social Security income only, we want to make sure that those folks aren't kicked out of the program simply because supposedly they make too much money. And so those were just some extra comments that I had. Thank you.
Thank you, Allison. Appreciate that. Do you have a comment from anyone else at this time?
Yes, we do. Rex Lamb, your mic is unmuted. Please go ahead with your comment.
Hi, Rex. Is your microphone unmuted?
Yes, ma'am, it was. I'm sorry. I figured it out. Rex Lamb with C-Link. C-Link is a reverse mortgage subservicer. So I wanted to make sure, answer some of your questions here on reverse mortgages and make sure that they, we were planning to include reverse mortgage borrowers in this program. Where reverse mortgage borrowers get in trouble is their inability or get behind on their property charges, which would include, their property taxes or their hazard insurance. So we want to make sure that the ability to help those senior borrowers get caught up on those property charges. Homeowner association dues also would be another area that we would want to make sure that is included in your program. For communication outreach, I know most servicers would be willing to include, the numbers, to encourage borrowers to communicate with you both through, attachments to a billing statement, or on our website. We'd want to put links up to how a borrower could get in contact with your agency to apply for the program.
Okay, that's good to know. Thank you, Rex. Did you have
Yes,
another?
ma'am. Thank you.
I didn't want to, was I cutting you short? If you had, please.
No, yeah, those are the areas I wanted to cover and just make sure that our senior borrowers were included in this program as much as possible. Thank you.
Okay, thank you. Thank you for your input. We have another commenter at this time.
Yes, we do. Elizabeth Gonzalez, your mic is unmuted and you can go ahead with your comment now.
I figured since other people weren't joining, I would throw in a couple more things that I wanted to mention that we see here in Orange County. I was going to bring up homeowner association assessments. I'm sure you guys know that the threshold for foreclosure on back HOA assessments is very low. It's $1,800. So if homeowners would be able to access funds to help pay off those homeowners association dues that were not frozen as a result of the pandemic, even a couple thousand on that would help save someone's home. I would also echo what was just said about the communication and maybe take it further. These homeowners have mortgage statements, they have servicing statements. In terms of reaching out to them, if those banks and servicers were required to include information about the program on monthly mortgage statements, that would probably help a lot. And I wouldn't necessarily limit to people who are already in forbearance or delinquent, because I will tell you, I have clients who will not put food on the table, and I don't want to cry, who won't put food on the table because they want to pay that house, because they are so proud of that. And so they will not miss a mortgage payment, but they will miss a light payment, you know, food. So I think it's really important to reach out to those homeowners as well. And then the other thing that we have seen is, you know, homeowners were blindsided, as all of us were, by this pandemic, and some folks had saved up some money and done some repairs, done some plumbing repairs, and put it on a credit card, or got, you know, solicited by a door-to-door salesman about X, Y, or Z, and they could have paid everything, but because of the pandemic, they can't now. One of my clients is a small business owner, and this happened to him. He had a plumbing emergency. He signed the contract, he was ready to pay, and then his business just shut down. So while his servicer was able to put him into the forbearance, he still has this credit card that he has to pay for the plumbing, because he was convinced to sign up for a credit card. So if the funds could go towards paying down some of that debt, and then I would echo the PACE issues. Even before the pandemic, our clients had a difficult time making those PACE assessment payments, because they had no idea how much their mortgage would increase. And so to be able to apply that money towards that delinquency or that assessment would also be very helpful. And then I would also encourage you to reach out to us legal services organizations. We work, I would say 60% of our clients are over 60. And they own homes. And so we can also directly reach out to our own client base. We have our own, you know, social media pages. We have lists that we can mail to, that if we were able to get some funding to reach out to our own clients and past clients who had these issues, I think you would find more people taking advantage of the program. Thank you.
Great, thank you. Thank you very much, Elizabeth. I'm glad we have the time to hear all of your comments. Any other comments at this time?
There are no further comments at this time.
All right, well, we are going to stick firm to being here until 4:30, so please don't hesitate. If you did have something you wanted to say, to raise your hand and provide verbal comment, or you can always provide written comment as well. It's been a very good discussion this afternoon, and lots of great information. So it's important to CalHFA, I know, to get that input. So as we wait, I'm gonna be here, and our screen is gonna be up here asking for some feedback. I'm gonna turn off my screen, but just know that we are here and listening for anyone who has a comment to make. I just want to check back in and offer the opportunity for anyone listening to provide feedback, input, comment. We'd love to hear from you. We have another 29 minutes on the schedule for this meeting today. There will be another one on Thursday the 17th. If you prefer to provide a comment in writing, you can do so by going to the CalHFA website and use the web address here at the bottom of the slide. You can submit a written comment to a specific email address that's on that site, or you can complete a survey. Again, if you are a homeowner in need right now and you need some help today, the HAF program is not up and running yet. It will be hopefully soon, but if you need help today, please contact a housing counselor at 1-800-569-4287. And we also have a mortgage relief program e-news newsletter that you can sign up for on the CalHFA website. And that'll be an important opportunity for you to stay updated on what's happening in the development of the HAF program. There's going to be a lot happening here over the summer and the early fall, so you'll want to stay attuned to all of the latest developments. We encourage you to sign up for that newsletter.
Nicole, we have a comment.
Okay.
Mariana Nuevo, your mic is unmuted. Please go ahead with your comment.
Hi, this is Mariana Nuevo. I work for a legal aid organization in Northern California, and I just wanted to echo the former comment that I hope that there are funds available for legal organizations, legal services organizations to do outreach, particularly in Spanish-speaking communities. And also, I hope that all the materials are adequately translated into the Spanish language. And I think that one of the problems is that a lot of people who live in California and speak Spanish don't speak really good Spanish. So sometimes if something is translated from Google, the Spanish comes out to, well, not a very good translation. So I hope that funds are allocated to translate properly every form or information available into Spanish. Thank you.
Yeah, thank you, Mariana. That's helpful. Good information for us. Thank you. Any other comments at this time?
No, not at this time.
Okay. Well, we'll be here if there are other comments. We're here until 4:30 today. So, well, we'll stand by.
Nicole, we have a comment. Lisa Sipkin, your mic is unmuted and you can go ahead now.
Hi, I'm not making another comment. I had put something in the box just to see if we could ask questions while we're here. Is that okay if I have a question for you guys?
Lisa, you are welcome to ask your questions. We may not have an answer to them today.
Totally
But
understood. Yeah.
asking the question is helpful as well, because that tells us things that people are interested to know about and to think about.
Yeah. So I was just curious to know whatever you could share about what you're hearing from the mortgage servicers themselves about their participation. I know we heard from someone from C-Link about a willingness to, help with outreach, which is really great to hear. I think that's going to be critical, particularly critical for that borrower group with the private loans, because the servicers are the ones who know who those are. But I just wonder, and I raised the point about issues with servicer interface and things with Keep Your Home, whether you're already in discussions with servicers, what you're hearing from them, what the concerns might be, to the extent you can share that.
Okay, I'm going to ask Tim Sue if he wants to pop on and offer any insights.
Hi, Lisa. First off, I hear what you're saying with your first comment about the difficulty of interfacing with the servicers. One of the when you are on these national forums, there's clearly a difference between the states that actually went through the hardest hit program, and their view of the servicers are very different than the view of the people who didn't have a program last time. So I feel you on that. I mean, in general, the servicers that we talk to are very receptive to the program. Some of them echo some of the comments that have been made by this group here. And I think that they're interested in, they're mostly interested in some of the things that that would want to, that would make the program easier to use as well. Some of the prescriptions that we had last time didn't necessarily come from us, as you know. They were prescriptions of Treasury, and this time the guidance is, clearly very different. And the easier the program is to use, the more interested they are in to participate. And this time they're also in a different situation as they were last time. But I do, we also hear you on the need to reach out to the non-regulated loans, what I call non-regulated loans, but the non-GSE loans and non-FHA loans. So those are definitely priorities for us as well.
That's great to hear. Thank you very much. Appreciate it.
Thanks, Lisa. Do we have any other comments at this time?
No other comments right now.
Okay. Well, sit tight. I know somebody will think of something. I have faith.
Nicole, we do have another comment.
Oh, see.
Maribel Torres, your mic is unmuted. You can go ahead now with your comment.
Hi, Maribel Torres with the Center for Responsible Lending. Thanks very much for keeping on the line. I was actually waiting for some background noise to die down before I could talk. I wanted to make another plug just to make sure that as it relates to communication and outreach efforts, that there is a really dedicated effort to partner with community-based organizations, trusted partners, especially for those who are not English proficient. We know that there can be a lot of misinformation about these types of programs that exist in communities, not by necessarily bad actors, but by people who are misinformed and then spread that information. So to the extent possible that partnerships that are already made can be supported, we think that that's very helpful, and that also that there is a range of options for people without internet access to have access to these resources as well, and information about the program too. Thank you.
Thank you. I'm going to just, Maribel, I'm just going to repeat what you said for the record. There was a little, your microphone was a little garbled a little bit. So I think what I heard you say was you think it's very important to include outreach with community-based organizations and trusted partners, especially for people who are not English proficient, so they know that they can trust the program and understand what is was real and factual related. And then also, you want to know, oh shoot, my notes fell short here. Options, you said also options for those with,
without internet access or people who have limited technology access.
Yeah, great. Okay. Thank you so much. I'm sorry. I just had a hard time hearing a little bit on that one. Thank you. Any other comments at this time?
No.
Okay. I do want to say, I know that there's a lull here on comments, but the comments that have been provided so far have been very rich and substantive, and we really appreciate that. So this has been a good session so far, and we're open to hearing more, but I just want to thank everyone who's taken the time to really think and provide some really thoughtful input and feedback for the session today. We have a little over 15 minutes left for the session. So if you had been planning or thinking about pulling together a comment to provide, just please be aware that we are down to almost 15 minutes left in the session.
Nicole, we have a comment. Francine Castanon, your mic is unmuted. Please go ahead with your comment.
Hi, Francine. We're here to hear you. Is your mic unmuted?
There we go. I'm unmuted. So the question I had was, you know, we don't really know when the funds are coming. We just know they're coming. Will the state be kind of fronting the funds with the anticipation of receiving them? Kind of like they did during the beginning of COVID, where the state sort of was funding the unemployment until the federal subsidies came in. Is the state contemplating doing that with this program to sort of get it in gear sooner rather than later?
Francesca, do you want to talk about that?
Sure. I mean, I think the answer to that is that, you know, we're still developing the program. We don't have any program parameters, but if you think that there's any kind of financing structure for the program at large that we should be considering, you know, I take your question as a proposal, as a formulation of a suggestion. So we'll be sure to include it as part of our feedback.
Yeah, sort of like what the state did with the unemployment. You know, they funded it, they put the money up front with the anticipation of federal funds. And knowing that people have now reached their limit with the forbearance, and they're not under a federal product, FHA, VA, USDA, or anything like that, they're under conventional, there is that uncertainty of what do I do when I can't pay this back. So it's figuring out that balance to help those, you know, even if it's getting them out of forbearance, you know, 3 payments to get them out of forbearance to refi for the Freddie Mac program for the low income, or people have become low income since they first obtained their mortgage, to ensure that that group of people don't fall and, you know, become another kind of problem.
Thank you, Francine. That's helpful and noted. So noted that that's an idea that we can push forward. Thank you. Or as a comment. Do we have any others at this time?
No, not at this time.
Okay. Just as we head into our last 10 minutes here together today, I just want to reiterate that if you wake up in the middle of the night with a brilliant point you wish you made at the session, just know it's not too late. You can go ahead and participate on the 17th, or you can submit a written comment. So you're not limited to today to provide your input and feedback. So we welcome your thoughts and ideas. These are some of the questions that you can think about providing input on in these final 10 minutes. All right, I just want to make sure everybody realizes we're down to our last 5 minutes here for this session. Commenters are providing 3 minutes of comment. We could have another person speak, or maybe we could even squeeze in 2 more. So kind of a last call opportunity here for this meeting, but not your last opportunity to provide comment. As a reminder, you can go to the CalHFA website to provide further comment or take our survey. All of that will be used and considered as CalHFA finalizes the plan that's going to be submitted to U.S. Treasury at the end of this month. So your feedback can matter and is important. But as I said too, if you can get it in sooner than later, that's all the better, because we only have 15 more days to finalize this first draft of the plan that's going to the Treasury for phase 1, and so it would be helpful. But we can also consider comments as we develop the program over time. Well, this is, like I said, been a great and robust meeting. So we have a few more minutes left, but the participation has been fantastic. I'm going to start wrapping us up here today. Again, thank you to everybody who participated and joined this listening session. We have one more on June 17th. If you would like to provide comments, please do so online or complete the survey. Again, a reminder that a recording of this session and a transcript will be available on the CalHFA website probably sometime early next week. It should be fairly soon, and available for anyone to observe and watch. So with that, it is 4:30. I want to thank you all for being here and wish you a pleasant afternoon. Thank you.